Okay, let's talk about, switch gears a little bit, because a common term that gets thrown around with insurance are riders. So tell me about riders in this disability space.
Yes, so riders are basically optional benefits that you can add to the contracts.
Okay.
Every carrier has different riders, but there are a few that are pretty similar across the board. Various riders that we encourage our clients to add are known as residual or partial benefits. That helps protect if something were to happen. So if you're not fully disabled and unable to move, right, that's like what we think of, like wheelchairs, crutches, and you're not fully working, what is the gray area? Like, is there something that could happen to where you may not be able to work full-time, but you can still work part-time? And that's where the residual or partial disability benefits kick in. There are some carriers that have really amazing residual/partial benefits that cover you even if you're working full-time and practicing full-time, but can't do all of, if you're still not making the full income. A great example of that is what if you were to go on a full claim for 3 years? What would be the odds that when you come back, all of your patients would be waiting for you? Now, most contracts out there, and this is again, fine print language, but major implications. What would be the impact if you were able to come back and work full-time and do all the duties, but all of your patients are gone?
Yeah.
Financially, you would still be suffering greatly. There's a couple of carriers out there that will actually base the partial or residual benefits upon your loss of income at that time, not your duties or how much time you're working. So this is a critical, important difference to where you may still be making half of the money going back to work, and even though you're able to do all the duties and you're working 40 plus hours per week, they would still be paying you possibly 50% or more of your benefit depending upon how much income you're losing.
Wow. That's a good point. And this is why Brandon's here, because clearly those are things that, I wouldn't think of that. I totally get I can either go and practice or I can't, or maybe I can practice half-time, but I'm limited, but it's obvious now that you say it, but to think about my patients all went to the guy down the street.
Right.
Because I was off for 6 months makes perfect sense.
Yeah, the partial and residual benefits is a big deal. We recommend our clients look into those greatly.
Wow.
Other benefits, important riders that you may want to look into, cost of living adjustments, commonly referred to as inflation protection. If you were to go on a claim full-time, long-term, if you don't have inflation protection, your benefit would stay flat. A lot of employer plans stay flat. A lot of association plans may stay flat as well. So again, high quality individual disability insurance is a whole other animal from those types of plans. But what inflation protection does is it will continue, most policies will continue to increase your benefit by 3% up to 6%. Some offer fixed 3% every single year, all the way typically until your benefit age. So a dental student, let's say, having a $5,000 per month benefit right out of school, you could fathom that benefit may be worth $12,000 to $15,000 per month in their 60s, and it's a substantial benefit. We highly recommend everyone add that to the contract.
Yeah, it makes perfect sense. Clearly, cost of living is out of our hands.
Milk's too expensive anymore.
Yeah. Okay, so let me ask you this, because this is a hot topic with our tribe, and that is student loans. How do these two pieces marry together? Do they, don't they?
So this is a very critical piece of the financial picture. And as a comprehensive financial advisor for our clients, what we do is we look to try to do a balanced approach with everything. So we work on student loans, we work on the investments and savings and all those different things. But one thing that's critically important is protecting your income so that you can continue to put food on the table, to continue to pay the bills, and if need be, continue to pay the student loans. Now, one of the things we recommend and teach our clients about is there is a way to protect your student loan payments through disability insurance. That is available via a rider as well, and in some policies you can buy it as a standalone sometimes, depending upon the carriers possibly. But what the student loan benefits typically will do is if you are receiving, let's say, for example, $5,000 per month in individual coverage, tax-free typically, you want to make sure you work with your CPA or tax advisor to make sure you're structured policy properly, but most policies should be paying you tax-free if you do it right. But what happens about the $2,000 per month student loan benefit, right? So oftentimes, a lot of our clients will say, well, if I'm completely disabled, I wouldn't have to pay my loans anyway, which may be true. Typically, the Fed will waive your loans after 5 years. But what happens if you go on a claim for 2 or 3 years and come back to work? What happens if you're not able to work as a dentist, but you go work in another occupation? If you're working at another occupation, you're still working, and the government will very likely still want their money, even though you're not working as a dentist. So that's where the student loan protection can be so important. If you aren't able to work as a dentist and you're working another occupation, you can add a rider called a student loan benefit, and it can typically pay up to $1,000 to $2,000 per month, or somewhere in between. I think you can go as low as $500 actually per month. But with student loan debts anymore for dentists, we're typically seeing $2,000 per month. And that way, if something happened, the dentist would receive, in the example provided, $5,000 per month, hopefully tax-free, and $2,000 per month that would be going to repay their student loans as well.